Hi, everybody. I'm Brad Bogus with Happy Cabbage. Today, we have a special guest coming to talk with us, John Manlove with Apex Trading. And we've got Danny Gold, CTO of Happy Cabbage here.
COO.
Also,
Cobb will
sorry.
get on you for that one.
Yeah, you're right. I was like trying to multitask all at the same time. And that's what happens, right? So let me give you a little bit of contact info for these fine gentlemen so you can see them. Um, So, what we're going to be talking about today is a good topic. It's a topic that touches everybody in the industry. We really want to make sure that we cover all of the different constituents here because we got a lot of new people joining us for this webinar. This isn't just going to be retail buyer focused like some of our other content is. But for those of you who don't know who either Happy Cabbage or Apex are, I'll give you just a quick intro as to who we do, what we are, and what we do. So Happy Cabbage makes retail cannabis ordering easy. That's really our entire main mission here. Our platform is about helping retail buyers get their job done. And really, that's like multifaceted. We try to think about what the retail buyer is going through in every possible facet. We talk to retail buyers every single day across multiple different sizes of organizations, breaking down their problems, understanding how we can arm them with tools that they simply don't have right now to help them solve some of these problems and do their job well, whether it's menu planning, ordering, or inventory budgeting. We've been able to make a pretty big impact and help them be happier in the process. Um, Happy Buyers is the tool that we arm retail buyers with. It's the only inventory tool specifically built for retail cannabis buyers in the industry. And using this tool and working with buyers the way we have, we've been able to cross the average retailer, save them $150,000 in cash flow over 3 months, looking at aging and overstocked inventory. If you think about how you stock inventory in a retail store, the more inventory you have, the more cash you have locked up on a shelf until those products are sold. So think of your shelves as a safe that you can't really access until somebody actually gives you money to access it. That's the money that we're freeing up. And that cash flow means a lot. It's not just cash flow, it's also time, right? Jockeying through spreadsheets and pivot tables takes a lot of time, and we're saving our average buyer about 10 hours a week every single day or every single week in their job roles, which is time they get to put back to like doing the magic stuff in being a buyer, meeting with your community, meeting with your brands, collaborating, increasing the vitality of your store. A couple other things we've been able to do is we've been able to reduce days of supplies on hand by 17 days, which represents quite a bit. We think about reordering intervals in a 14 to maybe 21 day time frame, where most people are ordering somewhere closer to like 45 to 55 day turnovers. And reducing that is essentially making sure that they're replenishing, reordering, but not over investing in what they're putting on their shelves. We've been able to reduce SKUs for these retailers down by about 11%, 14% of them being slow moving. So we've been making quite a big impact. This is where that money comes from that we cite when we say $150,000 in 3 months. And you can just see the results from the customers we're working with, from single location retailers to multi-state operators with 16 plus stores or whatever. We are seeing those gains across the board, and we've got a lot of great companies and great buyers we get to work with every single day to do these and solve these problems. We are integrated with the best POSs out there. We just actually rolled out support for FlowHub. So if you're a FlowHub user, great news. Come join us. But we're also on Dutchy and Blaze, Meadow and Trees. Probably more to come in the future, but this represents the bulk of everybody who needs support in this way. And I would be remiss not to mention that we believe so. Like, let me just say this: our tool has already done so much for retail buyers. We believe in those results to such a degree that we've decided to just give people live store data, full onboarding integration for 14 days for free. You can come actually just use the platform yourself and make reordering decisions and like actually complete all of the actions you can complete in our platform for 14 days. It's not like a gimmicky free trial. It's not like demo data. This is like you can actually run your operations through this platform for 2 weeks for free. And if you don't like it, cool. Then it's not for you, and that's all good. but we have a pretty good strong bet we're willing to make that you're going to want to stick with us after you try it out. So come test drive it. You can come to happycabbage.io. We've got free trial links everywhere. We really want you to do this for 14 days for free. That's like our main call to action here, right? So that's Happy Cabbage. I want to kick it over to John so he can introduce Apex, as I will probably not do as good a job.
Oh, no, I think you do just fine, Brad. That 14 days free trial, man. Take advantage of that. Yeah, so John Manlove, CEO and founder, one of the founders of Apex Trading. We have been around since 2014, so going on, over 11 years in the wholesale B2B landscape. We support brands and retailers, providing them best-in-class tools, really everything they need to solve the core problems that they have when it comes to wholesale efficiency at an affordable price. We operate nationally. We're in over 23 states. We work with some of the biggest MSOs, all the way down to your smallest craft farmers or producers. For operations, we provide a full suite of features such as, inventory order, workflow, and task management. We have deep integrations not only with metric and accounting systems such as QuickBooks and Sage, but all the industry-leading ERPs, so Flourish, Cannex, Distru, Acumatica, and many more in the works. And so really a centralized place that is agnostic to whatever solutions operations are running on for their ERP or their ERP, but really creating the connective tissue to allow brands and retailers to order and discover products efficiently. Yeah, you can keep clicking through. There's just some of our features here.
There you go.
And yeah, and some testimonials. So, like I said, we operate nationally, and we work with the likes of Miramed, Cookies, Planet 13 to support all their wholesale operations, again, all the way down to your smallest craft producer in Maine or Vermont or Oregon as well. So really, have created a solution that we feel is applicable and provides a lot of value, no matter the size of your operation, right? And again, at one single monthly affordable price.
Well done. Snappy. Kept it quick. All right. So I'm about to disappear. I'm going to kick it off to Danny. He'll introduce the topic, and then Danny and John will just get right into it. If you have any questions along the way, there's a button at the bottom of your Zoom screen that has a little question mark, says Q&A. That's where you can enter your questions. They're all anonymous. Not other people won't see them. And we'll be able to tackle those at the end of the webinar. But you can also just drop them into chat. It's fine. Like, communicate with us on chat. We love having an ongoing dialogue, and we'll try to address whatever ideas or questions and feedback you provide us along the way in the chat. Without further ado, here you go, Danny.
Awesome. Nice job, both of you. So right off the bat, I want to kind of address topic of the webinar, right? Why are we here? We love to be in the middle of conversations that I think are extremely topical to our customer bases. As Brad said, we exclusively work with the retail side, the buyers. Right now on Happy Buyers, we have some reports that are sent over to brands, but the brands aren't our customers. Retail organizations are exclusively our customers, and our end users are primarily the retail buyers, some store GMs and ownerships, and some other users throughout the retail organization. But obviously, tariffs are a buzzword, right? Not just inside cannabis, globally right now. We've heard a lot of chatter from our customer base, from the community on LinkedIn, around tariffs, and then some changes in the wholesale marketplace. So I just want to first and foremost say, on the Happy Cabbage side here, we work with all the wholesale marketplaces. A lot of the orders that we produce in our tool aren't even sent through a marketplace. They're texted directly to a brand rep, right? Or they're filled out in those glorious Google Sheets that brands love to share with retail buyers, that they have to copy and make orders with, right? That landscape is complex, but as anything changes in our community, we don't want to shy away from talking about it. We want to bring it up. We want to have an open dialogue. We have nothing against LeafLink. I've been going to LeafLink events here in Denver for almost 10 years now. They're obviously OGs in the industry. We wouldn't be talking about this if they didn't have a lot of respect, if they didn't have a lot of market share, and if they didn't have a good platform and tools, right? But as business models change, as fees come along, those impact supply chains, right? And our conversation today is just obviously some news around some potential fees coming, but stacked on top of other tariffs. The actual tariffs going on globally are impacting cannabis, right? packaging comes from overseas, vape hardware comes from overseas. Everything adds up. It's already a tough time in our industry. And that's really what we want to talk about is like, what is there to give? Like, we're all trying to survive and find ways to thrive here. But I feel like for 10 years, we've all been saying this, but it's a tough time. It's a tough time in cannabis. And there seems like there's some things stacking on us there. So that's going to be one of the primary topics is just like, how do these fees that are coming in impact our industry at this time? What do retailers need to do? What do brands need to do? We'll have an open dialogue. Open invite to the LeafLink team. If any of you all are on here, you want to hop on and talk about this. Let's hop on next week or the week after. We don't want anything to be one-sided. We just want to have an open dialogue. That is a very, very, very hot topic right now in the industry, especially under with the people that we talk to on the brand and retail side. So John, let's kick it off and just dive straight into these topics. What's going on? What have you heard? We should probably lay the land of what are we even talking about with tariffs and fees and just business model changes in marketplaces? That's obviously your world through and through.
Yeah, I mean, totally. Thanks, Danny, and thanks for putting this together from the Happy Cabbage, team and welcome me here. I think it's become pretty clear across the country, for anyone that is using, LeafLink, that there's a new change in the model coming, right? On top of SaaS, you're going to be charged, a take rate or a percent of order volume. And I think that what you can look at is there's a boatload of features that come with that. A lot of fintech things, a lot of banking solutions, some data insights as well, right? That I think ultimately probably layer in and offer some value. But the question is, what are the core problems that operators, both from the brand or the retail side, have today? And are these solutions solving the core problems that they have? And do they feel like the rates provide a really maximize the ROI on what they're receiving? And I think the thing that we've really understood, and really, being in and running this business now for 8 years and being really, really close to operators is, for the last several years, as we've acquired hundreds of brands, some from LeafLink, some from other platforms, some who were on spreadsheets, right? None of them came to Apex Trading saying, hey, we want better banking solutions or factoring or this. They said, how can you make me more efficient, right? My margins are getting tighter and tighter. How do I do more with less? What's keeping you up at night? Not knowing if my buyers are out of stock of product or not, or whatever it is, right?
Yep.
Not turning my inventory as fast, producing too much and having to discount, right? The fundamentals, right, is still one of those that operators are really longing for. And while I think there is value in what can be delivered from a fintech side, ultimately is it providing the solutions to the problems that are core to operators today.
Yeah.
And if it is, right, can operators afford it and
Mm-hmm.
use that? And I
Well,
think that's what we're kind of seeing in the market today is a new rate change with a lot of solutions and features that I think could be valuable to certain clients, but to the broader market. And our perception is from Apex is something that clients aren't really asking for. The market's not really demanding,
Yeah. So if you're asking somebody to pay more, like what's that value exchange, right? It's like I would say like the adage, in a lot of software is, if you can charge me $1 and make me $5 on it, I'll pay you that dollar every day of the week, right? If you charge $1 and I can make $1.20 off of it, that gets tougher. Those are the margins. Is where does it come from, and what's that value exchange, right? If my costs go up, what am I getting in return? Is that saving me money? Is that making me money? Those are the two major buckets, right? Is that additional fee saving me money, or is it making me money? And you mentioned there might be some functionality in there, but just talking about margin, let's just anchor in margins for a bit because that's where it all comes down to, right? And we all talk about this a lot that cannabis has some of the thinnest margins. Thank you 280E, state and local taxes, right? Like all these things that start to take a part of every dollar we make and don't let us write off any of the dollars we spend. All those things are already add up. So like that's the current state, right? Then you have price compression in certain markets where that's going to reduce margins there. I'll just throw out one thing too. I find that sometimes retailers don't have a good grasp on their current margins, period. You talk about like Keystone pricing, like, okay, Wholesale pricing is $1, retail MSRP is $2. We talk about excessive discounting is one of the biggest margin eroding things. I've seen reports even recently, even in the last week, I've seen reports coming from retailers. We show margins in our tool. And we show margins at a lot of different levels, and it's really cool, right? It's not just like the margin on the SKU or the margin on the store. We let you walk your whole inventory so you can see what's my overall margin on 1 gram infused pre-rolls across every brand. Okay, let me zoom in. What's my margin on this specific brand's 1 gram infused pre-roll? Okay, what's my margin on the sativa? I doubt your margins are that different on classification base, but you can kind of walk and slice and dice your inventory and understand those margins. And a lot of times when we present data, we get pushed out. This is wrong. Oh, that can't be right. I can't have a 37% margin. I have a 50% margin. It's wholesale. And it's like, well, we're calculating margin post discount pre-tax. We're calculating margin on what are the dollars you get to live off of, which everybody has to understand, right? When you come to pay your bills, the only thing that matters is the dollars that went back into your bank account after you sold the product. You don't get to keep any of the tax, and you definitely don't get to keep any of that discount. And so we'll see stores, where the margins are in the 30s already today. We'll see like good stores in that low, I would say, to upper 40% range. Different markets are different, but like getting 50% margin is actually getting increasingly rare already. So if you planned your whole business on, a 50% margin or better, I think you're already scrapping for dollars. So like, where do
And I
these
think the
things come
same,
from?
Dan, not to interrupt, the same is true for
Yeah.
brands, right? Like sometimes with so many changing costs and different variables, right? Unless you have the infrastructure to really be diligent about using and implementing an ERP as it's really truly a tenant, put everything into it. They also are sometimes don't have the true sense of what the margins are after they've given
Mm-hmm.
discount pricing or bulk pricing or various incentives or things of this nature, right? Plus cost. So I think it's still a struggle there. And it ties back to like, as operators, if you are not really shored up on your cost accounting and in some of your margins, right, then this can exacerbate a much broader problem, right? When you think about,
Yep.
okay, a take rate or a tariff or something implemented, what's our packaging cost? If we don't know those really, really well, now it's going up. Are we eating that into our margin, not realizing, or are we passing too much on? I mean, there's a lot that goes into that on the same side, right, from the brand just as much as the retailer.
Yeah, it's a whole supply chain, right? I think that's an important part here, and bringing it back to the specific fees on hand, right? We understand that. I think to start, that's primarily on the brands, from what we're hearing, right? Is it starts there, and I'll just say, when we're talking about fees and you're talking about cost increases, there's a place it starts, and I think it would be a bit naive to say that's where it ends. So I think that that's a big part of this discussion is what is there to give where, who picks up the tab, right? So let's talk about that in who picks up the tab and just like kind of slice and dice this and understand. And let's not call out one fee. There's a stack of things, right?
Yeah.
I think about price changes is like you don't change price every time a cost goes up. You eat costs sometimes, but you reevaluate pricing constantly. And when things stack up and there's a stack of changes, if your packaging cost goes up and your hardware cost goes up and a fee in the systems you use goes up, you're going to reevaluate pricing. And then
Yeah,
the
or
supply chain is going to react.
reevaluate systems in that same sense.
Yep.
Like I think what
Right.
we really, when I look at this, you kind of have like what I've kind of called like low price conditioning. And this is the core, I think one of the core issues in a lot of like more mature markets that have been around for 5, 6+ years is that ultimately supply has overtaken demand, right? In a lot of those markets. And what that's happened, right, is we've started to condition the retail purchaser about low pricing, right? Low price
Mm-hmm.
conditioning on this. So I'm not going to pay more for the same product next week than I paid for it this week, right? Like
Right.
I'm not going to pallet that. It's not something I'm going to do. I'm just going to go and change to a different brand or change the way I purchase, right? To make sure I'm holding my price because ultimately the consumer's conditioned as well, right? Consumers, we have this thing around loyalty and loyalty. Are they loyal? Are they not? They price shopping, right? So the moment the consumer is coming and they're shopping at your store, but now it's a little bit more expensive, where are they conditioned, right? They might just go look somewhere else. They don't want to hit
Mm-hmm.
their pocketbook. Their costs as a consumer with everything else, it's not like milk and eggs are cheaper, right? Their costs are
Right.
more. So they're not necessarily wanting to shoulder that either. Alternatively, I think the thing that we have to also remember is not only have we conditioned low pricing through the cannabis supply chain, you also have this threat of hemp, right? And so we got to remember there's intoxicating hemp out there that's readily available. There's not as much tax burden on these businesses. They might be able to sell it at a lower unit rate at that, top 10 liquors or wherever the heck it is, right? But
Yep.
there's also the threat of hemp as well on pricing. And so I think there's just ultimately in the supply chain is what we look at today. And this might not be as prevalent in like a brand new market, right? Where demand is still outpacing
Yeah, where it
supply at
sells
a
itself.
point.
The only place it ever sells itself,
Yeah,
that first
exactly,
year.
right? But everywhere else, right? By year 3, supplies caught up, prices fall up to 50% within 18 to 24 months. Once you start to see that, it's a drastic drop, and people's costs as an
Yeah.
operator are not changing, right? If anything,
Yeah.
every year they're going up slightly. And now with this, so this is, I think, ultimately where we think about this bigger, broader issue of where's there room for
Hmm.
additional fees in today's market, especially in legacy markets, right? Where they're already razor thin margins. They're thinking about survival, right? And you're thinking about, okay, what adjustments do I have to do to my business? Staffing, systems, packaging, overhead, regular costs of things that I'm running my business on. How do I lower those to try and remain in existence, right? And so when you get
Yep.
hit with these things at a time when you're already really stressed and you're already feeling overwhelmed, you're not really sure about that. It it doesn't feel right, right? And I think that's where some of that reaction has been pretty swift the last couple of weeks, and a lot of some of the legacy markets and new ones too around how do I absorb this? And really, it's the worst time for my business to be hit with this, right?
Yeah.
And I think that's kind of, and I think a lot of it ultimately market conditions and the conditioning of pricing. You know.
Yeah. I think, we talk to retailers all the time on ordering, where cash flow can actually prevent that retailer from purchasing the products, even if they know they'll move. They can just already be so cash flow constrained, which is a horrible position to be in. Like, sorry, this month things are tight. I can't actually place as big an order as I want. Now, a lot of that's due to aged overstocked inventory, and we can talk about other problems where we can free up the cash flow. Brad hit on those. That's not our topic here. If you're having that problem, please call us. We'll show it to you in your own data. But I think a couple things, and I see this in the chat as well. Questions coming up already. Something we hear that I think is it smells a little bit of a problem that's going to bite us long term. It looks like a short term solution that I think is going to come back. One of our key pillars at Happy Cabbage, we talk about community a lot, right? We want to support the cannabis community. I think all of us say that. We all talk about like we wouldn't be doing this otherwise. This industry is hard enough. We believe in it. We want to see it succeed. We've been through multiple hard times. We're in another one right now. But when we think about community and the entire supply chain, it's retailers and consumers. We want consumers to have access ultimately. Retailers have to thrive, and it has to be available in local markets at a price point people can afford, and brands have to be able to bring new products to market. Like, we need survival across that supply chain. And we're in a place now more than ever in this industry where survival is not given. Capital has dried up. These margins are thin. Like, survival is not given. And when I see the buck being passed around in the supply chain, it's not going to stop with any one person. It's going to impact the entire supply chain. So if we talk about these fees being absorbed by the brands, I instantly go to, and I worked on the brand side for a long time in training. So I have a lot of empathy there, and I know a lot of the brand players, even though we exclusively work in retailers now. I hear retailers talk about things like margin protection, right? And things like, oh, I don't have to worry about, like, the brand's going to absorb that fee. I don't have to worry about that right now, or I've already got margin protection baked into my contracts, right? I don't worry about over ordering as much because the brand will take it back, or I don't worry about over discounting as much because the brand takes that. I just said like 5 different things that we expect a brand to take, right? The brand's got to survive. You've got to have these products in there. That brand's only going to absorb so much before the brand prices go up and those get passed along, right? This is a supply chain problem. And I think it's short-sighted to say somebody's going to absorb it right now, because it's going to be very temporary, or they're not going to be around. And I'm guessing if you carry that brand, you probably want them to be around. The consumer definitely does if it's a good product. And we just can't put this all on anybody, which means I think you're going to see inflation if it goes there. And then you're going to come back to what you mentioned, which is now you have market competition. Are they going to go back to hemp? Are they going to go back to other alternatives in there? Because I think the inevitability is short term, somebody might eat it. but it's gonna cause inflation through the supply chain. It's gonna be price inflation at the end of the day as these fees get tacked on.
Yeah. And I think, you're right. I mean, I think eventually it makes it way. It's going to make it down and we'll see where it is. And I think in that short term, what you could see, right, is this disalignment of incentives and what's best for everybody, right, in the market, right? And so I think we kind of see two factions today as people consider what they want to do, right? Is what's best for me and my lens of my operation is my business and what's best for the market as a whole, you know? And so we have certain states that are more making decisions together as a group, right? Whatever that is. And then you have other states where people are very much pushing the whole market to what's best for them and not necessarily what's
Mm.
best generally for the whole. And when I think about that, right, is where, like, where do you think, I guess, Danny, from your side, how do we, if it's a short term, right? We're saying, okay, this is getting, someone's eating this, or we're gonna, build it into that. What do you think, like incentive wise, this creates? If I'm a brand now saying, okay, I'm charging 2 or 3% more to the
Mm.
retailer, and the retailer's like, well, I'm not gonna pay that. You got to eat it, or something. I actually think what it's going to result in is like more overproduction and more over purchasing of inventory to
Mm.
get your
Yep.
price, right? How do
Yep.
I get a lower price? You buy more. That's how it
Yeah.
works. Always how it
Yep.
works in wholesale. And what this does is I think it only leads into potentially expanding the oversupply, overproduction, and then the over purchasing at retail when you think about that, just to be able to
Yeah.
chase the perceived margin, right? Way you can speak way better about that, but I just feel like that's a cause and effect that we will see
Yep.
happen, as
And
well.
there goes your cash flow, right? So if you look at we're data nerds, right? We use a lot of data science. Our CEO Andrew Watson is a data scientist by trade. We deploy a lot of just data science analysis and machine learning and AI on top of all this kind of stuff, all kind of nerdy things. So we look at data a lot, right? One of the reasons we built the Happy Buyers product is we'd worked on marketing for a long time, right? Because like bringing in new customers and building loyalty in customers is obviously extremely, extremely, extremely important. So people know the Happy Cabbage name through like marketing, just targeted segmented marketing. Hey, I'm carrying a new pre-roll. I got a great deal on it. John, I think you'd like it. I can send a text or an email to you, put that product in front of you, get you in the store, track how many people come back in and get good ROI on that kind of targeting, right? We worked there for a long time. That works really, really well. We found, obviously, that's not the only problem that needs to be solved in here, but getting some of that data, we started to look at where cash was constrained for launching marketing efforts, opening new stores, like just talking to these retailers about their other challenges, and looking basically at aged inventory and the number of SKUs in the store and all. And basically, what the marketing starts to become is like I need to clear out old inventory and I need to clear out the SKU that I probably should that maybe I tried. I love trying new products. I think people should try new products. I never want a retailer to be scared to try a new brand, but just so many SKUs, right? Like how many bets can you place at once, right? It's like playing 37 hands of blackjack at a table. Like maybe play two. Don't have that many going at once in here, right? And so we started to kind of tug at that thread of that problem. Where's that coming from? How do we fix that? That overstocked inventory, right? So overstocked inventory, too many SKUs, so menu planning, and then just overstocked inventory, ordering too much, not understanding your true turnover rate, right? Not basically what we always talk about, which is like the second I sell out that pre-roll, I'm restocking it is like that ideal scenario of like you're turning it over as fast as you're replenishing it. But what we see already is basically retailers acting as like vaults for the brands. And I'll put price protection in that. I see retailers justify this in a lot of ways not being a problem. Like, oh, well, I can just return that. I have margin protection. And it's like, well, why are you taking all this product and putting it in your vault? You don't have that much space just to like return it. This is literally kicking the can down the road. This is a problem. This is an oversupply problem, right? That brand's trying to turn it off to you to get off their books temporarily and move it around and hope it sells. But you're already putting margin protection in, so you're expecting it not to sell, and then it sits and you return it. You're exactly right that unit costs are super, super important. And people have budgets on ordering and they're looking at all these margins and they're negotiating this margin protection. So what's going to happen? We already see this. Oh, I want to manage 14 days of supply. And then we'll flag in our system, you have 92 days of supply, John. And then you start to justify it. Well, I got a good deal on it.
Yeah.
And it's like, there's probably better ways to negotiate a deal that don't just require you to like shelve this inventory for somebody else that's not going to move in that period of time. Oh, we know it's going to move eventually. We got a good deal on it, right? Well, yeah, if the price goes up 15, 20%, and then I want to maintain my same price, and then I'm going to order more to do that, then the retailer is just shelling out temporary even if price protection's in here, right? You're not a bank. Like you're not a loan shark. You're not a vault. You need that money. You need to throw up a billboard to attract new customers. You need to host an event. You need to sponsor a local community thing. You need to fight for regulations. Like you don't want to tie that cash up for 90 days, even if, oh, it's protected. Like that's cash flow. You need that. And
Well,
I
on the other
do
side,
think you're
right?
going
The
to
brand's
overorder.
turned around going, well, we need to produce, we're producing to this demand, right? Wow, we got all these new
Yeah.
sales. Let's buy more packaging. Let's get more newts. Let's get more of this,
Yeah.
right? Let's do more automation, right? Again, perceiving what could be this false demand, right? And I think it's
Right.
the idea of this, like we were talking about past, is like your incentives being aligned with your provider are incredibly important. Right. Because what I look at is if I'm charging a take rate as a platform, my goal is to get you to move as much volume through my platform. I do not care how healthy it is for you if you're overproducing or whatever. I just want you to move as much GMV through my site as possible because I'm going to charge fees on it. Right. As a
Mm.
SaaS provider is charging a monthly rate, the more you put in, you're not paying us anymore at Apex, right? What we want to do is to maximize efficiency. We want to make sure, hopefully, maybe we're saying, hey, based on data we're getting from great partners like Happy Cabbage, we think that you're overproducing by 15 or 20%. This is the actual demand. This is true up based on what you're forecasting of stores you can get
Mm.
into. And now we're actually telling you to produce less as a
Yeah.
platform. Because our incentive is to make sure you're profitable and to make sure that your unit economics and gross margins are as strong as they can, and you understand the data and the cost accounting. That I think is a really important thing too when people think about their providers, right? Whoever that is,
Mm-hmm.
no matter what it is, software could be anything, right? Are your incentives aligned, and how do you make sure that they are? Because if they are, then that provider is going to give you, they'll, they charge you $1 and you're going to get 100 back, right? Because again, they're realizing what their place is as your provider in the scope of what you need them for and what problem you're trying to solve for them. And ultimately, as a provider, what promise have you made to that client? And are you fulfilling that promise, right? Or have you promised something and then a year or two later said, market's changed. People should grow up. We should all mature. Here's FinTech. Take this thing, right? Or
Yeah.
take this solution and you just, it is what it is. And I think that is a core, I think maybe the issues here is just making sure incentives align, because if it doesn't and we start to pass this buck down, or if we're trying to incentivize retailers to buy more, it just makes everyone more unhealthy as an industry that today could really use more strength, right?
Yeah.
And more reinforcement rather than trying to stack a bunch of fees or things on top of
Mm-hmm.
what is already somewhat of a leaning tower of Pisa that's swinging back and forth in the wind.
The incentives are such a smart way to look at and evaluate partners, right? And I think that, I mentioned like we all at least give lip service to it. I hope some of us are genuine to it, that like the longevity of this industry, which is a lot of times in question, definitely certain markets, right? And then you zoom in, definitely certain customers, right? We have customers that we're fighting for. I have a dispensary down the street from me here that like I'm fighting for, and I know they're on the edge and I love them, and they're like family owned and they've been in this neighborhood for 10 plus years, and they're just barely making it, right? Like I'm walking in there trying to give them ideas and trying to help out and like post Google reviews and all these kind of things. So like even down to those single stores, but all the way up to the industry, you think about like I'll just speak to some of our incentives, right? Some of our key KPIs are really all around like reducing aged inventory costs, like shorter term things, like KPIs we put in front of our customers. Like we got to get your aged inventory costs down so we can give you cash back so you can deploy it to grow your business. Bigger picture, just for health of our business and where we fit into it. It's like the basically how long is a customer going to be on our platform? which also means they have to be alive. They have to maintain their license and be there, right? Like, oh, if we're going to set this all up, like I need you to be a customer for 3 years, right? So I have to do everything and make all the right moves so that you are still a customer, you're still in business, and you can still work with us, and you still want to work with us, like that lifetime value of a customer, and our churn rates and all those kind of things on these products, which is part of the reason we started doing these free trials, which we haven't seen a lot of in cannabis tech, about like,
Yeah.
hey, for right now, we'll waive onboarding fees and let you on and use your data, because we want, you're going to be, you're if you already know everything about it, if you can use it and place orders with it and look at it, you know exactly what it is, versus, oh, I felt like, you pulled one over on me and this isn't what I thought it was, like come in and use it kind of stuff, right? But those
I love the
incentives
North Star
all,
metric as a business,
yeah,
right? Maybe it's something if you're a brand, a retailer, whatever, looking at tech, right? You could ask people like, not only what's on your roadmap, what are your, what's your ethos, your culture, your vision for the business, right? But also like, what's the metric that you're really defining your success as a company, right? As a platform.
yep,
And that's a really unique question. I've never been asked it. And I'm just thinking our North Star metric when we started this year was buyer created orders, which are up 6% for already this year, which
mm-hmm,
when you're doing, almost 15,000 orders, that's a good percent increase a month. And what we really felt was buyer created orders to us means that sellers are really adopting the tools and they're really getting all the gains from the marketing and the CRM and the store
mm-hmm,
and all that, right? And then what we know is if buyers are creating orders, they're in the app, they're living in it, they're discovering more brands. So new brands are getting more value from the network. And then ultimately, too, the existing brands are getting more efficiency because buyers are creating the orders. And instead of their team receiving 90% of orders and
mm-hmm,
manually putting them in each night, 55% of all orders in Apex are placed by buyers, right? That's the average across all markets. Some markets are over 80%. What that means is that sales reps are out there growing revenue, getting, making sure consumers know who their products are, right? And looking how to like growing revenue through no stores or getting more SKUs on shelf space and understanding, hopefully spending the time to understand the retailer to make sure the incentives are aligned. You're selling really what's going to be great for them to have holding power in the store, right? And I think
yeah,
those are very critical. I think there was a question about Dama that I saw. I just saw it pop up. I think that at the end of the day, like I've raised venture capital. Happy Cabbage has raised venture capital. LeafLink raised a lot of venture capital, right? There's a lot of companies in the tech space that we were reliant on investors to start our businesses, right? Some
mm-hmm,
self-funded, but majority weren't. And so I think at the end of the day, when you're telling investors a certain thing and you're painting a story to raise capital, right? And I'm assuming monetization of GMV is one of those, right? All of us on the tech space, either as point of sale or wholesale, pitched monetization of GMV as the big North Star of what's going to make this company worth hundreds of millions of dollars, right? Apex scrapped that 3.5 years ago. We said, we're not going to monetize on GMV. I don't see it. The clients are going to ask for it. We're going to be profitable as a SaaS company. We're going to focus on the client's real problems, not the solution or what we've
mm-hmm,
somehow pitch to
yep,
ourselves and convince ourselves we can do this, right? We don't have conviction behind that today as an operator. I think in the future, maybe. But our big thing is like, I think at the end of the day, what you've presented to investors as a CEO or as founders, you're going to have to live up to those things or you will not be here, right? They will
right,
remove you. They will take over. They will do whatever.
yep,
So really it's job protection in a sense and also trying to fulfill what you have promised or led investors to believe, whether that's a reality or something that is
yeah,
not reality, right? And I think that's a core thing is really understanding that some decisions potentially being made aren't driven by the team. They're driven by the board and by the investors
yep,
who aren't close to the plant and aren't close or care as much about the individual operator. They care about the return on their investment. And that's a very
yep,
different philosophy as you think about is my provider focused on that maximizing and I should always think about as an operator, like for me, I want to maximize shareholder return, don't me get, but I'm not going to do it I'm not going to sacrifice who we are, what we are, what our
yeah,
promise was to clients to get there, right? There's an ethical
yeah.
line I draw essentially.
I think this is a little bit like peer behind the curtain in the venture backed world. A lot of the retailers and grows and brands are venture backed as well, which I do think is also, when you talk about that, like how is that impacting? How did what we raised money for and say we're going to do without necessarily reevaluating every day and looking like we're pivoting too much? A lot of the oversupply comes down to that. We definitely saw that in Canada, right? Like they were like, well, we're going to be producing this much and have this much canopy. This is how many square feet we're going to have here and how many stores we're going to have. And even as market conditions change, it's like that you did that so that you could go to the board meeting and say that you did that. And we said, let's go, we're going to do that. We just opened this new cultivation. We just did this. All of that was part of kind of satisfying, those things that we said. I do think it is very like open knowledge, or at least very easy to deduce. And if somebody wants to counter this because we don't have inside information around it, like let's host another one of these and talk about it. But you talk about like, look at what point of sales are reporting, right? Look at what wholesale marketplaces are reporting. Look at the numbers that they report. How many transactions? The dollar transaction amount through has almost always been a KPI that's been publicly reported. Now that's interesting because it ties to tax revenue for local markets. It ties to just like how big is the industry growing. It's an important number, right? But I think a lot of those companies, we see this in the point of sale side as well, we're kind of pitching like the hockey stick they were going to get that was going to return shareholder value was a take rate on transactions.
Yeah.
Right. And we might not have thought of that in the wholesale side. We definitely thought about it at the register. Right. And some of the point of sales have been backed by companies that have done this in other retail markets where it's the credit card fees. Right. It's the percentage of every transaction. Because I'm going to like that's retail point of sale 101. Right. The retail point of sale outside of cannabis makes all of their money pretty much on they give away hardware, you give away monthly fees, they make it all on credit card transactions. They get a percentage of every order in there. And I think that's where a lot of the point of sales, rightfully so, kind of pitched. But thank you, federal regulations, not making that super compliant. Then I think that you've got to look at like, are they trying to get it now? They've got to do that to hit the next profitability metric. I do love, and I'll just say one more thing on the North Star. I do love that our North Star metrics are very aligned. We have a number we report every Monday to our whole company that we talk about, which is our number of happily buying customers. And we've defined this metric that's happily buying. It's very similar to you.
Yeah.
It's actions that they take in the app that were like ordering activities. Like they went through and they were able to make a decision on ordering using our data, which is AI based, which we think is hyper accurate. So we take that as like they made a better order. Like congratulations, here's the confetti and the unicorns. Yeah. You made a good ordering decision. But like they have to make a certain number, and that's how many orgs. And like we're hitting records every week with that number. But that's our North Star right now. It's just like, are you getting the value out of the platform? Did you make a better decision this week than you did last week when you didn't have the platform? But I think that I see some other comments in here. I think that you've got to watch it if you're a retailer, especially on here. And if you're finding yourself in this trap of, I don't have to worry about fees. It might be margin protection. It might be packaging costs. It might be anything that you think is going to be passed on to the brand. I saw a question. How long do you think it'll take for the fees? Where's that inflation come from? Then I think we've got to look at it. It's probably not going to happen next week. It might happen next quarter. People are going to evaluate the prices. If the brand's margin has been eroded through tariffs on packaging, through fees that they have to pay on platforms, by 15%, they're going to change prices. And the retailers are going to have to evaluate that. It's probably going to come out to the consumer. It's going to come in somewhere. So have a longer lens, and maybe it's 6 months. I don't think it'll be much longer than that. We're all guessing here, but the supply chain cannot absorb additional fees at this time without prices going up. I feel pretty opinionated on that because I just don't see where it comes from.
Yeah, I agree. I think the other thing too, as we kind of think about, what could be the longer, short term, but then longer term impact, say 3 or 4 months, what I would see is that you're going to, as a retail purchaser, you're going to see a more fragmented market. So we know that in legacy markets like a Colorado and Oregon and Michigan, right, as Apex, and I think it's changing, but always kind of struggle to win over the buyers because they're like, well, we just use LeafLink and that's where all the brands are and it's easy and we're used to it and that's where they are, right? Well, when brands are leaving, right, now you're receiving spreadsheets, you're receiving menus in lots of formats, you're using multiple platforms, your purchasing has just become more inefficient, right? And I think it's important to consider as we think about that again, is like, as people are moving, as brands are moving, like how can, like for us, right, we know like Distri's rolling out an e-com solution, right? But we play nice. We have a full integration with Distri, a 360 integration, right? I'm not trying to undo them or that. We're saying, hey, what's going to be best for this market or these operators? And let's make sure if Apex and Distri combo is that, if it's just Apex or if it's LeafLink, that's fine, right? But we need to do what's best for that client. We don't need to try and sway them one way. We can present our tool and they're going to decide what's best while also expressing, hey, fragmentation really isn't good. It just creates more inefficiency. It's going to create more issues. But I
Yep.
know
Brad wants to cut me off. I'm going to say one more thing on the fragmentation, because this is something that we have interesting data on that I think gets glossed over in the market. There is not a retailer in North America that does 100% of their ordering through any single wholesale marketplace, period. I see people talk about market share. That might be Apex market share. That might be LeafLink market share. Oh, they have 80% of doors in this market. And I see people jump to the conclusion that means 80% of the stores are fully ordering through there. There are brands that are sending spreadsheets. There are brands that are calling and showing up in person. We see this because our platform generates orders. We are doing all this AI to figure out exactly how many units you need to order, what products you shouldn't order, and a lot of those orders get sent over email and text. A lot of them do get sent through wholesale marketplaces. They sent through LeafLink or Apex, but nobody has 100% market share even in a single retailer, because of the fragmentation along the brand. So it's already fragmented. And you already are going to have to hop on that Google sheet to get that hot drop of that strain that came out on Tuesday that you got to log in like you're buying Red Rocks concert tickets here in Denver and grab it before somebody else does. Like that's happening everywhere, and there's nobody that can do 100% of their orders through one marketplace. So it's important, I think, for retailers to own that data, to look at it, to understand their margins, to understand their buying power there, and be ready for these things, and be ready to switch things up as the market continues to change. But that fragmentation is there, and this might cause it in certain markets where maybe you were presenting 80% of your orders there, that might start to shift. And you better be ready to take on, that's hours of work, right? So that's just, it takes a long time to prep those orders. The marketplaces add a ton of value to that. But understand your data, understand influences in the supply chain so you can order accurately. Don't overstock. Cut your SKUs down right now. Cut your aged inventory down right now. You need that cash. It's not going to get easier out there.
Yeah.
Not in this economy, as Danny likes
Not
to
in
say.
this economy.
So we got a lot of really good feedback and questions. I'm going to leave this contact slide up while we tackle them. But I also, just on the question about when are people going to raise prices, I just wanted to note half of the respondents to our poll indicated raising their prices is the response to when fees go up in the supply chain, right? So some people
You heard it from them, not us.
That's right. Some people are eating it. Some people are buying in bulk, right? So there's a blend, obviously, but half are indicating that raising the prices is what they're going to do. I think that's important to point out. All right. So we got a lot of good questions. Thank you guys so much for all of the questions you threw in here. Some of these are some really, really, really good ones. And let's start with this one. 1,000-pound gorilla in the room. The MIP I work with, for people in other states, MIP is just manufacturers. The MIP I work with is getting a 10x price change from LeafLink with little to no ROI, since we will not be using those features. What is the industry feeling on this? Will the lack of listing on LeafLink destroy business? Can you list there and never use it for SGO and list at Apex for all your actual needs? How will dispensaries shop with these changes? So kind of a number of questions packed in there, but 10x price change from LeafLink. That's different from some of the numbers I've been hearing. What are your thoughts?
Yeah, I think that probably maybe that was a long-standing LeafLink client who got a really good subscription deal and has been grandfathered in, and they're seeing that big rate. I mean, that's a pretty dramatic increase. As I think about, break the couple of those sections out, Brad. What was the first main question there? Off of that.
Yeah, what is will the lack of listing on LeafLink destroy business?
Yeah, I think that in this market, we're a small company. We're a smaller company, right? And we raised a lot of big venture capital, and we've really grown that organically, right? We've grown our business through trust and through delivering on our promise to our clients and making sure they're getting best in class tools at an affordable price, right? At the end of the day, in this market, trust is everything. And I think when people feel like that bond of trust was broken for certain reasons, whether, hey, you've jacked my rate and you're trying to give me all these things I really don't want, but you're still going to charge me for them, like doesn't feel good, they start to lose a little bit of that trust, right? With whoever it is. I think that's just business. Or it's the same if you're dating a boy or a girl, right? And they are being kind of jumping around. You're not sure. And then every time they leave the house, you're worrying and you're anxious about what they're doing, right? That's not a healthy relationship. And you don't want to be feeling like your software provider is your cheating girlfriend, right, or boyfriend at the end of the day, and you're really not sure what they're going to do when you're not there or
What an
what they're going to
analogy.
try to do. And I think that's ultimately, I think just the bond trust in this industry is paramount. And I think it takes everything to build it. It takes very little to break it. And everyone knows each other and they all talk. And when you do someone wrong, they're going to tell everyone about it, right? And I think that ultimately, some of that, what I'm hearing is some of the fabric or bond of trust between that technology company and their clients has been broken down, you know.
Yeah. One of the other questions that was in there, I think Danny actually addressed, which is the idea of like, can you list in one spot, but do business in another? And it speaks to the fragmentation of where and how you sell or buy products, right? So like
Yep.
everyone's going to use everything all at once. Maybe some people have the proclivity to use just one thing, but for a brand to list in multiple places is extremely normal, very normal, right? The idea that any one platform would capture everyone's business and transactional information is kind of wild, right?
Yeah,
Yep.
we,
Like
we've
And
had
that's
one,
clients since the history, sorry, Danny, from the history of our company that decided, hey, I'm going to use Apex for this purpose, and I'll use LeafLink or Leaf Trade previously for this purpose, right? We don't require exclusivity. We try and highlight, just create more inefficiencies and more data silos, and it's going to confuse buyers. And there are ripples off of that decision. But ultimately, if you're a brand saying, I got to be here so people see me, and I'm worried about that revenue loss, we're my company will never stand in your way, right? We hope that we're providing you enough tools, enough features, and enough buyer adoption where you're like, I don't need to be there anymore. But that's on us, right? Ultimately, you
yep.
need to do in the incoming or transition period what's best for your company. And we will never stand that way. We'll just try and work tirelessly to win over the rest of that part of the business and show you the value, right? But at the end of the day, I don't think it's a thing that, Apex would ever say, you can only be on one. Sorry.
And I think, and I don't want to hand wave across a chunk of questions, but I do want to say none of us here are here to spread like fear, uncertainty, and doubt. We're trying to have a conversation that everybody's already having. Add our experience to it. We can't speak to specific rates. I saw some questions about like the rates being different in different states. How much that rate is increasing, whether you can do certain things in the platform. Once again, I'd say like LeafLink, come chat with us. Let's host some content about this and talk about it. People are obviously very interested in it, and we're getting a lot of questions to it. I do think in general, what we're trying to talk about here, which would be relevant to any fees in a supply chain that are going up, is how to look at it, how to evaluate it, what does it mean, and to make sure we don't look at it with a short-term lens. I hope also on the provider side that that gives us some pause as we change business models and timing when they may be hitting on other sides in there. But we don't, we're not operating those platforms. Things also change, right? It's important, and I think people talking about it. I'll throw up an analogy, right? If there's any gamers on here, the Switch 2 was big news, right? Switch 2 came out right in the middle of a tariff firestorm, and the price was really, really high, and everybody's talking about it. They're talking about it because they care. It's something they use. It's something that they like. That is why we're talking about this with LeafLink and these wholesale platforms. They're important. They're an important part of the supply chain. They have a ton of value in the supply chain. But I just want to be clear that we can't speak to like certain price increases. We don't have firsthand knowledge. We're not making those decisions here. We're hearing a lot about it. I don't want to fuel any speculation that wouldn't be true in there. I'd welcome, the first parties involved there to answer some questions and respond to it, and we'd be happy to talk to them anytime.
Yeah, and it seems like
I'm glad
we hear from operators who are like, I still haven't heard. I don't know what's going on, right? I'm hearing
Yep.
through Reddit, I'm hearing through word of mouth. So I think there's a lot of rumors, there's a lot of things going out there. And I think Danny, 100%, like, we're just trying to, make sure operators and retailers are thinking about this a little bit more holistically, right? Of what could be the impacts, what's the decision tree, what routes do I want to go, how could this affect me? And then ultimately, like I have a lot of faith. I think operators will decide what's best for them, right? As they understand their business and the current need and the current environment. I would definitely consider like look at everybody. Everyone offers something a little different. Some of us do things a lot better than others. Some, it really depends on what you're really needing to solve. But definitely encourage operators like go check out the 3 or 4 alternatives out there, right? And I think it'll be pretty clear to you fairly quickly what's going to be the best move, right? For your business.
Yeah, Danny, I'm glad you addressed that because I was trying to think of like how do I not gloss over this question because it's so specific, but knowing we don't have the expertise to answer it.
Yeah, it's just
So
not that. Yeah.
yeah, yep.
Mhm.
We got another question, or actually, this is kind of a point to the idea of when price adjustments are going to happen, and I think this is an interesting comment because it so well reflects what we were talking about when we were preparing for this webinar, which this person anonymously wrote, Q3 we'll see price adjustments, in my opinion, likely due to
I'd take
larger
that bet.
macroeconomic conditions, right?
I'd take that bet.
Yep.
That's
Yep.
good. I think, yeah. I think, like I said, I think maybe it's not one quarter. It's also going to take a while in here. I think definitely, like within two. I guess we're technically we're in Q2 now. I think towards the end of that, like people are going to be evaluating. It's not going to be one thing. I do think prices are evaluated when there's a number of changes, right? If somebody increases a fee on a product on packaging 3%, like I'm gonna raise all my prices 3% overnight, right? Like you adjust these. This is all also like market. There's a lot of considerations that go into a price change. If you're going to change a $10 pre-roll to a $12 pre-roll or a $13 pre-roll, if a brand, you're going to do that with caution, right? Any of the brands that have been around for a while have been through price changes in different markets on both directions, decreasing, increasing. You're going to evaluate that probably quarterly. You're probably not going to make more than one price change within a 6-month period. I'm speaking in generalizations here, right? You guys can all poke holes in times when you had to do that. But if you've got real tariffs coming from materials you use that are coming from overseas, if you've got fees coming through in platforms, those things are going to stack up. That cost is going to be in the double-digit percent changes, and that is going to trigger price evaluations. And then we're going to see where those things end up landing and how close to the consumer they end up getting, because
Well,
eventually it's going to be inflation to the consumer.
another thing, Danny, we haven't even fleshed out here is quality, right? So there could be an impact of quality here, right? As we think about, hey, do I hold my price? What am I going to do? I'm going to cut different other costs, inputs, various things. I could be getting a cheaper hardware from China that leaks, 30% more. And I have a hard time buying 10 thread carts these days because they almost all leak, right? And like that's a challenge. And so as we think about, okay, if I can't pass this down, and I'm going to absorb it. Well, I'm not going to absorb it on my margin. I'm going to find lower cost alternatives, right? Whatever that might
Mm-hmm.
be. If I'm a pre-roll manufacturing, I might be buying a little bit lower quality inputs and I could be spraying with terpenes instead, right? To pivot over there. No, not to get into that conversation, but
Love
I'm
that. That's
just
a
Yeah.
great
thinking
point.
as well as that you could see something happen on the quality if people, just if you're just going to pass that down. And I just think that that's generally, again, I'd be interested to see what happens there. I think it's going to be
Yeah.
track, but I would think that that could be a cause and effect, as well.
Yeah. And if you're in a state where you can mail order THC flower, which we all know is real flower, you might start looking at that. I saw a comment about like Curaleaf converting one of their stores to hemp. John hinted at that. Like that's somewhat inevitable. If you can get a similar product, and we can all debate whether it's similar or not. We know I have my own things on safeties and COAs and concerns for consumer safety. It's very important to me. But if people can get a similar product cheaper and just as easily, they're going to move. If we raise pre-roll prices 30% and there's a hemp shop on the corner, that's where you're going to get your pre-rolls, right? So that is a health of the industry consideration as we look at inflationary prices across the industry if it comes to that.
Yeah.
Yeah, I mean, it's to the point of the name of this webinar, who takes the hit, right? Like in that case, it's the consumer, right? We've talked about brands and retailers, but the consumer can take the hit because that quality
Mm-hmm.
can definitely be where that money comes from. Well, this was
Things
really
together.
lively. Guys, so many great questions came in, a lot of good interaction. Obviously, there's a lot of concern and ideas about how to handle all of this. But I just want to say thank you all for joining. Thank you, John, for all the great discussion and insight. Obviously, if you like what you heard here from what Apex has to offer, you can reach out to John directly. You can go to their website, sign up for a demo, take a look, see what it's like. And we will be circulating this webinar recording afterwards to everyone else as well. So you won't lose all this information once I switch off the slide right now. And just to remind you, because I'm going to do this a lot, we are providing a 14-day free trial to happy buyers. So if you need to manage this inventory, if you want to reduce your overstock, if you want to free up cash in this economy, one of the best ways to do that is to analyze your inventory, look at your data, find actionable insights from happy buyers that can help you to get to that point where you are reordering only 14 to 21 days at a time, and you're using that cash fundamentally to grow your business, to survive this economy, to do whatever you need to do, to absorb maybe these increase in fees, right? There's a whole lot of cash just like waiting for you on your shelves. We want to help you get there. We'll give you access to your live data and tell you right off the bat exactly how much you're overstocked. So come check us out. Check out our 14-day free trial. And John, again, thank you so much for your time, sir.
Thanks, guys, for having me. It was fun. Always a pleasure.
Super
Absolutely.
fun.
All right, guys. Have a great day.
All right. Bye, everybody.